I hope you guys are ready to make a ton of money with this new strategy I'm about to teach you, because this is one of my highest profit producing strategies that I use after the opening bell. And that's a very important detail to touch on right now early in this video, because you're going to know everything about stock trading circuit breaker halts, how to make money on them, how to manage your risk in them, and what looks the best moving forward. But the main thing you need to know before we jump into any of this is that these types of strategy setups only present themselves after the 9:30 a.m. Eastern opening bell until 4 p.m. Eastern, when the market then closes. Outside of that time frame, you will not be able to trade the setup because circuit breaker halts are not active unless the market is open. So first things first, I created this little board for you guys. I want to dive into some of the boring stuff first, and then we're going to be able to jump into some of my real archives that I have of me making anywhere from $600 to $3,000 trading this setup. First things first, if you are a total beginner, you should know that there are halt ups and there are halt downs. Now there's a very distinct difference between these that we need to talk about. And they have similar candles in the moment where we get the run up, we hit our halt level, and then typically in a halt up, we see a large gap up and then we resume trading. In the inverse, the halt down, usually we will see the stock resume much lower when it halts down. Sometimes these will resume flat. More often than not, they will resume in the direction in which they were already heading. But it is important to know early on, just because a stock halts up doesn't mean that it will resume higher. There is sometimes where it will halt up and then it will resume lower or at the same price. There's a way to know if it's going to do that, which we will get into in the video. So moving on to the anatomy of a halt, there are bands that track the price action of the stock, the candlesticks of the stock chart. If the stock is to exceed its band because of high volume due to news catalysts or short squeezes, then it will be circuit breaker halted. And you can spot this, as you can see right here, on the NBBO. So what does NBBO stand for? Grab a notebook. NBBO stands for National Best Bid Offer. That is the level 2 data book. And on the level 2 data book, you will see LULD on the bid and the ask. What this means is limit up, limit down. That is your halt up level. We'll get into that more in the live example. I just want to get the basics drilled into your head. Limit state, 15 seconds at band trading is still allowed. So sometimes when the stock hits that limit up or limit down, you'll notice that there's still trades being taken on the book. It will be harder to take a trade, for example, to get in or out with a market order, but there are still shares exchanging because there's a little bit of a lag, usually that 15-second auction. Once it is triggered and the stock is halted up, there is a 5-minute increment until it resumes to the second. So if it halts at 9:35:02, the resumption is 9:40:02. And if it does not resume after that 5-minute increment, then it will resume another 5 minutes from that point, and so on and so forth. There is no restricted time. It can go on indefinitely. Typically, it is 5 to 10 minutes. On some of the high volume cases, you will see 20+ minute halts. The reopening auction is you'll be watching the time to predict when it will resume, and there will be an imbalance in the feed publish, and it will look insane when it resumes. You'll see in the archives that we watched together, the books are rapidly changing and they're trying to catch up, and there's orders being placed in and out, and it's a big mess. Immediately after it resumes, you will then see the next limit up. And the thing about these, why they can make you so much money, is because typically they shoot right up into another one and another one and another one. And then sooner or later, the stock has gone up $10+ a share in just a handful of candles due to those big gaps up that we see. Pauses in the last 10 minutes of session. Stock will not reopen, closes via end of day auction. This is saying that if the stock halts with 3 minutes left before market close, then it will just reopen on limit orders only right after the market closes. Very dangerous. You do not ever want to trade these at the end of the day. You only want to trade them with a nice buffer in the morning. So if this was our 1-minute candlestick chart, we would be targeting an entry at 180, because on our level 2 data, you would see that it's $1.80 for the limit up, meaning that if the stock hits it, we get halted. So this is the dotted line here, that is our limit up. So when we hit it, stock stops. The candlestick stops, nothing happens for the next 5 minutes. It is halted. It is not moving. It is not accepting orders. You can put out a market order to buy or sell. It will not get filled. Exactly 5 minutes later, we get that gap up and the stock opens up here closer to $2 a share. That's a 20-cent increase On 1,000 shares, that's $200 from timing the halt. And then it resumes a little bit higher, as you can see, and then maybe 240 is our next halt up, and boom, we're halted up again. So it's important to note just one more thing before we get into the live archive. When it comes to the small cap stocks, they are not all created equally in terms of how they halt. So if the stock opens up in the morning below 75 cents a share, this is very important to note because it makes it much, much more difficult for you to manage risk, because as it resumes lower or higher, it so rapidly halts again. And if you're not super quick with getting out or in, you could get stuck. For this reason, I would urge you to avoid, in the beginning, trading any kind of stock like this. And it's easy to know if it's going to do it by looking at the level 2 and just paying attention to the pre-market. What was it trading at in the pre-market? If it opens up 75 cents, or if it opens up between 75 cents and $3 on the morning, then it will halt every 20% up or down. This is the most common halt zone, and this gives you a very nice buffer and a lot of room to work with, because typically you'll have time to decide if you want to either hold through that gap and go setup, or if you want to maybe get out and look to get back in, because you have a lot of room to work with. You don't have to worry about getting stuck. Then above $3, the mid tiers is a 10% up or down. We call that the standard tier 2 band. These are going to be the actual examples of how I was able to trade. So let's dive into number 1. So before I click play, I want to note a few things. This is what the gap up looks like. This range right here is how you know that we halted up, and typically this is what your volume profile will look like as well. It kind of skips a candle, right? Because we're halted. For sure, if you're looking at previous history, you'll see this little bit of a candle formed here as we halted up, and then the next candle opens with this big gap, and the volume profile is missing a volume candle almost entirely. The important thing you need to look at is this. Limit up is $6.30, and the stock is currently at $6.16, and we're going to see it hit in real time. Look right here and watch as the limit up makes its way all the way to the top. It's going to climb the books. We're going to see it hit, and then the stock is going to stop trading. And I have my hotkeys ready to go, and as soon as I see this hit this number, when I hit my buy market order. Because when it hits the bid, that's how you know it confirmed it. Typically, if it only hits the ask and never reaches over here to the bid, it can be a fake out. So wait until the bid becomes this number. And now we can watch it in real time together, and you'll be able to see exactly what I'm talking about. So you can see the spreads have us at 625, so we're not there yet. Waiting, and there we go. And then you can see how we stack up. Our limit order gets shifted over here, and we are officially halted up as the tape floods red. That's what you'll see. And I'm in here with $3,000 worth at our 630 halt, and now we can go ahead and see where we resume. You guys see right here, that is how you know when this thing will unhalt. So 10:02:35. So we'll be back at 10:07:35 to the second, okay? To the second. This is very important. So now we're waiting to see at that exact time what the stock does. And you can see, we can also see our current resumption price is just a little bit flat. We're going to open just 1 cent higher. It's not the strongest in the world, but let's see if it changes in real time, because it will be adjusting right before our eyes. We open up, we dip. This is a very typical thing that you'll see with these. I had to handle a little bit of volatility. This isn't the most perfect gap up example. This is a very bullish candle, bottoming wick, somewhat off support. We're looking for the new high, crushes it. You can see I'm up $252. Looking for the $half break, which we get, and then we're targeting the whole dollar break of 7. So buyers come in right in underneath again, and you can see our halt up is 698, right? So we're looking for 698 right there. And it's currently at 690, 698, and guess what? Just punched into another halt up. You guys see how that works now? So all we're doing is waiting for this limit up order to go from over here to over here as this reaches that price. Pretty simple. So we halt up again. I'm currently up $458 as it's halting up again, and this thing could resume 750, 850. Those are just the better case scenarios. go ahead and comment what the current halt on TGL is. I want to see if you are paying any attention whatsoever. We make that squeeze up, and 752 is our mark. We're watching right here on the bid for 752. Watching right here. Is it going to hit it? 752, boom, there it is. You see that? And then our limit up gets shoved over. This starts to flood red. And that's when you punch your order right there. And if you get filled, you get filled. If you don't, then you don't. A few things to keep in mind, though, in examples like this, is you want the volume profile to be in your favor, meaning that the green volume candles are bigger than the red candles. And you want your MACD open typically. At this point, you should be really aware of how these work. We're waiting for 823 right here. That's where my eyes are. Right there, we hit it. Now I'm just waiting to see that limit order get squeezed over. 845 now, manipulated. So now we're looking for 845. Just focusing here. 845, 845. You can see we're getting a nice squeeze up here on fresh volume. This is a great setup. The spreads are a little bit big. And there's 847, 855. Waiting, waiting. And there it goes. It gets punched over. And then this floods red. And right there, my order goes out. You can see I'm in it. So that was an example of somewhat of a fake out that you'll see here and there. This one stabilizes. You can see right there. And then we flash forward a little bit here. The resumption is $9.45. So almost a full dollar a share higher. And look at that gap. Look at that gap up. I'm up $632. Looking to get filled. Where are we going to go? Where are we going to go? We're dropping, we're dropping. So in this instance, you want to use a market order for speed. You don't want to risk putting a limit order out and it just sitting on the book in case it is to flush down, which can happen. So your next limit up here, 1034. So you would just be watching right here. I don't believe that this ends up hitting it. It might. I don't remember in this example. It's very bullish here. Will it squeeze through 10? That's the target, $10 break. And it dips and I'm out. So a few things to keep in mind. It's never going to be perfect. And the main thing is to be ready for anything. Just stay ready. Don't be fiddling on your phone. Don't be going to get a new cup of coffee. When you're in it, you're in it. And you need to sit there and you need to focus. Don't be distracted and don't overcomplicate things. That's a very important detail here. So before we end the video, if you guys stayed and you found this helpful, I want you guys to go ahead and just drop me a like and subscribe to stay up to date with all of the stuff that I'm doing. I have so much good stuff coming. And if you are ready to take your trading to the next level and work with somebody like myself who is profitable, who is up 85% year to date in 2026, trades this strategy and a couple of other simple small cap strategies, I want you to go ahead and navigate to the description of this video and you can join my Discord community. We have almost 9,000 members. And once you join, you can go ahead and explore it. I'm very active. I'll be live. Chat, you can learn, ask me anything. It will just be the best place to be if you are serious about making money. So guys, before we end the video, I really hope to see you there. Go ahead and comment and let me know if you found this video useful. I really hope you did. I have so much more coming. Thank you for watching, and I'll catch you guys in the next one.